Did you know that the very first real-world transaction using Bitcoin was for 2 pizzas? It's completely true. On May 22, 2010, a programmer named Laszlo Hanyecz made history. He offered to pay 10,000 Bitcoins to anyone who would order 2 large pizzas and deliver 2 large pizzas to his house in Florida. At that time, 10,000 Bitcoins were worth about $41. Another early crypto enthusiast accepted the offer, ordered the pizzas from a local Papa John's and had them delivered. This event is now famously known as Bitcoin Pizza Day and is celebrated every year by the crypto community. It marked a pivotal moment, transforming Bitcoin from a niche curiosity into a potential medium of exchange. Looking back from today, September 4, 2025, the value of those 10,000 Bitcoins is staggering. If you were to calculate their worth at Bitcoin's peak prices, those 2 pizzas would be the most expensive meal in human history, valued at hundreds of millions of dollars. As we explore the fascinating world of Bitcoin together, I want to extend an invitation for you to join our community of informed investors and enthusiasts. Understanding finance and new technologies is a journey, not a destination. By subscribing to this channel, you'll get regular, easy-to-understand updates on everything happening in the crypto space. Bitcoin, Ethereum, the latest market trends. We break down complex topics into simple, actionable information so you can feel confident in your financial knowledge. As a special thank you for joining us, everyone who subscribes from today until the end of the month will be automatically entered into a giveaway. We are giving one lucky new subscriber a small crypto-related gift, a hardware wallet. This device is one of the most secure ways to store your cryptocurrency, keeping it safe from online threats. So, take a moment right now and hit that subscribe button. It costs you nothing, it ensures you won't miss out on future deep dives, and it gives you a chance to win a valuable tool to safeguard your assets. Let's get right to the number that everyone is watching. As of today, September 4, 2025, the price of 1 Bitcoin is hovering around the $95,000 mark. This is a significant figure, and for anyone new to the space, it can seem incredibly high. It's important to remember that you don't need to buy a whole Bitcoin. You can buy a small fraction of one, known as a Satoshi, which is the smallest unit of a Bitcoin. For example, you could invest $100 or even $20 to get started. This makes it accessible to almost anyone, regardless of their budget. The price simply reflects the total value of the network divided by the number of coins in circulation. The journey to $95,000 has been a roller coaster. This is what investors refer to as volatility. Just a few years ago, Bitcoin was trading at a fraction of this price. It has experienced several major bull runs, followed by bear markets with big corrections. For instance, we saw incredible peaks in 2021, followed by a prolonged cooldown in 2022 and 2023. The recent climb past previous all-time highs has been driven by several factors: institutional adoption, regulatory clarity. Now for the question on everyone's mind, where does the price of Bitcoin go from here? While no one has a crystal ball that can predict the future with 100% accuracy, we can look at analyses from financial experts and institutions. Many prominent analysts are forecasting that Bitcoin could reach prices well into the 6 figures within the next year or two, 150,000, 200,000, or even higher. These forecasts are not just random numbers, they're based on specific models and expected catalysts. One of the most popular models is the stock-to-flow model. This model quantifies scarcity, treating Bitcoin like a commodity such as gold, silver. It compares the total existing supply of the asset, the stock, to the amount of new supply produced each year, the flow. Because of an event called the halving, which happens approximately every 4 years, the new supply of Bitcoin gets cut in half. The most recent halving in 2024 reduced the block reward for miners, making Bitcoin even scarcer. Historically, prices have surged in the 12 to 18 months following each halving event, and many analysts expect this cycle to repeat. Another major driver behind these bullish predictions is the continued flow of institutional money into the asset class. The approval of spot Bitcoin ETFs in the United States in early 2024 was a landmark event. This made it incredibly easy for large investment firms, pension funds, individual retirement accounts to gain exposure to Bitcoin without having to buy and hold the asset directly. For a long time, Bitcoin operated in a regulatory gray area. Governments, financial institutions weren't sure what to make of it, but as Bitcoin's market cap grew into the trillions, that changed fast. Today, in 2025, the regulatory landscape is getting clearer, and that's crucial for Bitcoin's future. Increased regulation might sound bad, but it's a sign of maturity. Clear rules can provide stability and confidence for large conservative institutions and the general public to get involved. Major economies have shifted approach, United States, European Union moving away from bans toward regulation. That includes implementing KYC AML rules for cryptocurrency exchanges, similar to how traditional banks operate. Beyond the price charts and government regulations, perhaps the most important indicator of Bitcoin's long-term success is its growing adoption by ordinary people and businesses. This is where the rubber really meets the road. An asset is only valuable if people use it, hold it, and believe in it. On this front, the progress has been remarkable. What started as a niche hobby for cypherpunks and tech enthusiasts has now entered the mainstream consciousness. Dinner table coffee shops, corporate boardrooms. We are seeing a significant increase in the number of companies that are integrating Bitcoin into their operations. This goes far beyond just accepting it as a form of payment. Major publicly traded companies like MicroStrategy, Tesla, have added Bitcoin to their corporate balance sheets, treating it as a treasury reserve asset to hedge against inflation of the US dollar. Payment giants like PayPal Block, formerly Square, have built services that allow their millions of users to easily buy, sell, and hold Bitcoin, dramatically lowering the barrier to entry for the average person. This corporate embrace lends a huge amount of credibility to the asset. For individuals, owning Bitcoin has never been easier or more accessible. User-friendly apps like Coinbase Kraken Cash app allow you to buy your first fraction of a Bitcoin in minutes using a credit card or bank transfer. The user experience has improved dramatically from the early days of complex wallet software and command line interfaces. This simplicity is crucial for mass adoption. As more people have a positive first experience with buying and holding a small amount of Bitcoin, the network effect grows. Each new user adds value to the network for all other users, creating a powerful cycle of growth. This growing adoption is the fundamental force that supports Bitcoin's value. Every company that adds Bitcoin to its balance sheet, every merchant that accepts it for payment, every individual who buys it as a long-term saving technology is casting a vote of confidence in the network. This is a grassroots movement that is happening from the bottom up and the top down simultaneously. While the price will always be volatile in the short term, this steady, undeniable trend of increasing adoption is the most compelling argument for Bitcoin's bright future. It's evolving from a speculative asset into a foundational piece of the new digital economy. So let's quickly recap what we've covered today. We started with the incredible story of the Bitcoin pizzas, a perfect example of how an asset can grow from being worth practically nothing to becoming a major global financial force. We then looked at the current price, which as of today, September 4th, 2025, is around $95,000, and discussed how you can own a small piece of it. We explored future price predictions, with many analysts seeing a continued upward trend driven by institutional investment and the Bitcoin halving cycle. Finally, we touched on regulation and adoption, noting that clearer rules and wider use are paving the way for its long-term success. The key takeaway is that Bitcoin is an asset that is maturing right before our eyes. It's moving past its early speculative phase and is now being integrated into the global financial system. Its core property, decentralization, verifiable scarcity, and censorship resistance, are proving to be incredibly valuable in today's world. While its price is known for volatility and the future is never certain, the underlying trends of growing adoption, regulatory clarity, and institutional interest paint a very compelling picture. Understanding these fundamentals is far more important than worrying about the day-to-day price swings. I hope this overview has given you a clear and simple understanding of the current state of Bitcoin. The goal is not to tell you to buy or sell, but to provide you with the knowledge to make your own informed decisions. Financial education is a powerful tool, and the more you learn, the more confident you will become. If you found this information valuable, I want to remind you one last time to subscribe to the channel. You'll get more content just like this, and you'll be entered for a chance to win that hardware wallet to keep your future crypto assets secure. As for your next step on this learning journey, a great topic to explore would be Ethereum. While Bitcoin is often compared to digital gold, a store of value, Ethereum is more like a decentralized world computer. It allows developers to build applications from financial services to social media on top of its blockchain. Understanding the difference between Bitcoin and Ethereum is a fundamental step in comprehending the broader cryptocurrency ecosystem. We'll be covering that in a future video, so make sure you're subscribed so you don't miss it. Thank you for your time and I'll see you in the next one.